Last week, a viewer told me she'd cashed out her entire US index fund. Her exact words, "I did great, but it's just too much USA." If you've felt that exact itch lately, this video is your guide because too much US exposure is the question half the Canadian portfolios I hear about are quietly asking. Stay with me, and you get the one number that tells you if your gut is right, a tour of Canadian listed funds most people have never heard of. And the mistake that turns a fair instinct into an expensive one. Quick honesty first. I held a fund just like hers for years and never once checked which country my money actually lived in. Certified genius move. So let's do that check together right now. Here's what she was holding. VFV tracks the big American index, which means every single dollar of it is US companies. Not most of it, all of it. One fund, one country, full strength. Now the yardstick. Line up the whole world's stock market and the American slice is huge. No argument, but it's still a slice. The rest of the planet exists. And it also sells things. So her gut wasn't crazy. Holding one country at full strength is a concentration bet. And that's true whether the flag on the fund is theirs or ours. That's the test. Your slice versus the world's. Quick pause. This channel is honest Canadian money math. Every week, no hype. If that's useful, subscribe. Okay, back to it. Now the chapter the cheerleaders skip. What leaving US stocks actually costs. For a long stretch, American companies did a lot of the heavy lifting in global returns. Walk away completely and you're betting that stops. Maybe it does, but know the bet you're placing. And going all Canadian isn't the escape hatch it feels like. Our market leans hard on banks and energy. Trade all USA for all Canada, and you've swapped one concentration for a smaller, chillier one. Currency cuts both ways too. Right now, one American dollar costs about 1.4 Canadian. Sell your US assets, and you're also making a call on the loonie, whether you meant to or not. One more trap. If that fund sits in a regular taxable account, selling can trigger capital gains tax. Inside a TFSA or RRSP, a switch is quiet. Outside them, the tax man hears everything. Check before you touch a thing. But here's the part that genuinely changed how I think about this. You can own the world's biggest themes without leaving the TSX or the loonie. And yes, that one number from the start is still coming. Promise. Start with the ticker our viewer discovered right here in the comments, CHPS, a Canadian-listed fund holding the world's semiconductor giants, the chips in your phone, bought in Canadian dollars on a Canadian exchange. She'd never heard of it. Most people haven't. XEF does the exact trick this whole video is about. Developed markets minus North America, Japan, Europe, Australia, basically the world except the USA in one Canadian dollar ticker. Kylo holds actual gold bullion sitting in a Canadian vault. XIC holds essentially the whole Canadian market for a famously tiny fee. Different jobs, same exchange, no currency conversion, no US login, and none of these made the list for their dividend. We covered why chasing yield isn't the point. That video's linked up in the corner. These are examples, not recommendations. Themes, not tips. Now, the reframe that matters more than any ticker. VFV's problem was never that it's American. It's that it's one country at full strength. So the fix isn't exile. The fix is proportion. That's literally the job of asset allocation ETFs like VEQT, XGRO, or XBAL. Hold the whole world. Keep the US near its world weight. Deliberately tilt some extra toward Canada, all in one Canadian dollar wrapper. Less USA by proportion, not by tantrum. All equity if you enjoy turbulence, the bond holding versions if you enjoy sleeping. The tour tickers are seasoning. The boring world fund is dinner. So here's your number. The payoff. Open your portfolio, add up everything American, and compare that slice to the world's. Sitting way above it, you're making a deliberate bet on one country. Own that choice. Sitting near it, your gut can stand down. Now, confess in the comments, what's your US percentage and which ticker from the tour gets the full video next. You're literally voting on what I make. And if you're weighing VEQT against XEQT, that full breakdown is on your screen right now. I read fund pages so you don't have to. And none of this is financial advice. It's a map. You're the one driving.